Have you ever wondered how billionaires manage to stay wealthy, even during market crashes? While most people watch their investments shrink, these financial titans seem almost immune to the turmoil. But what's their secret? Well, in this video, we're uncovering the surprising strategies that the world's richest people use to protect their wealth during economic downturns. So, let's dive into the world of billionaire wealth protection. Understanding the risk of market crashes. Before diving into the secrets that billionaires use, it's essential to understand the nature of market crashes. These are periods when stock markets or other financial markets experience sudden and significant declines. While they can happen for various reasons, such as economic downturns, global crises, or even unexpected events, they share one common trait. They can wipe out a significant portion of your investments in a very short time. For most people, a market crash can be devastating. Retirement savings, college funds, and other crucial investments can lose value overnight. But for billionaires, it's a different story. They don't just survive market crashes, they often come out stronger. How? The answer lies in the strategies they use to safeguard their wealth. Number 1. Diversification. One of the fundamental strategies that billionaires use to protect their wealth is diversification. This simply means spreading investments across a variety of assets to reduce risk. Instead of investing all their money in one type of asset, such as stocks, they distribute it across multiple asset classes like real estate, bonds, precious metals, and even private equity. By diversifying, billionaires ensure that if one market crashes, the impact on their overall wealth is minimized. For example, while stock markets might be plummeting, real estate or gold could be holding steady or even increasing in value. This balance helps to cushion the blow and maintain their financial stability. Number 2. Holding cash. Another secret weapon in the billionaire's arsenal is liquidity. During market crashes, cash is king. Billionaires know the importance of having liquidity, money that's easily accessible. While others scramble to sell assets at a loss, billionaires often have a significant portion of their wealth in cash or cash equivalents. This liquidity provides them with the flexibility to seize opportunities when the market is down, such as buying undervalued assets at bargain prices. Instead of being at the mercy of market fluctuations, they can make strategic moves that increase their wealth in the long run. Additionally, having cash on hand allows them to maintain their lifestyle and meet financial obligations without the need to sell investments during a downturn. This strategy is like having a safety net that not only protects, but also empowers them to grow their wealth when others are struggling. In the world of wealth protection, liquidity is a powerful tool. Number 3. Real assets. Billionaires often turn to real assets like real estate and commodities to protect their wealth during market crashes. These tangible assets have intrinsic value and typically perform well during economic uncertainty. Real estate, for instance, provides steady income through rent and generally appreciates over time, even during downturns. Owning property offers not just financial returns, but also a physical asset that's unlikely to lose all its value overnight. Similarly, commodities like gold and oil are considered safe havens. Gold, in particular, tends to rise in value when stock markets fall, acting as a hedge against inflation and currency devaluation. By investing in real assets, billionaires create a safety net that not only preserves their wealth, but also provides opportunities for growth during times when paper assets like stocks and bonds might be faltering. Number 4. Strategic debt. While debt is often seen as risky, billionaires understand how to use it strategically to build and protect their wealth. The key is leveraging debt to invest in appreciating assets, such as real estate or businesses that generate steady income. For example, they might take out a low-interest mortgage on a property that earns rental income far exceeding the mortgage payments. This allows them to use other people's money to grow their wealth while minimizing their own financial risk. However, billionaires are cautious with debt. They ensure that any debt they take on can be easily serviced, even during economic downturns. This conservative approach protects them from being over-leveraged, which could lead to financial ruin if the market crashes. By using debt wisely, billionaires enhance their returns without exposing themselves to unnecessary risk. Number 5. Building and owning businesses. Another key strategy is owning businesses. Many billionaires own and operate successful companies that generate consistent cash flow, regardless of market conditions. Unlike stocks, which can be volatile and influenced by external factors, a well-managed business can provide a steady and reliable income stream, even during economic downturns. Billionaires often invest in businesses that offer essential products or services, ensuring consistent demand regardless of market conditions. Moreover, businesses can adapt to changing circumstances, cutting costs, pivoting to new markets, or innovating to stay competitive. This adaptability gives billionaires more control over their financial destiny compared to passive investments. Additionally, businesses generate cash flow that can be reinvested, providing both stability and growth. This dual benefit makes business ownership an attractive strategy for protecting wealth. Number 6. Insider knowledge and connections. Billionaires often have access to a level of insider knowledge and exclusive networks that the average investor does not. This advantage allows them to stay ahead of market trends and make informed decisions that protect and grow their wealth. They frequently consult with top financial advisors, economists, and industry experts, gaining insights that are not widely available. Their connections also open doors to exclusive investment opportunities, such as private equity deals, real estate projects, or early-stage investments in innovative startups. These opportunities are typically off-limits to the general public, giving billionaires a unique edge. Additionally, their networks provide support during market crashes, offering advice, partnerships, or even rescue deals that help them navigate turbulent times. In essence, insider knowledge and connections are not just about who you know, but how you leverage that network to safeguard and enhance your financial position during market downturns. Number 7. Patience and long-term perspective. Patience is a cornerstone of billionaire wealth protection. While many investors panic and sell during market downturns, billionaires often hold their positions, trusting in the long-term recovery of the market. This disciplined approach prevents them from locking in losses and allows them to benefit when the market eventually rebounds. Billionaires understand that market cycles are natural and that downturns are often followed by periods of growth. They also maintain a long-term perspective, focusing on the overall trajectory of their investments rather than short-term fluctuations. This mindset helps them avoid making impulsive decisions driven by fear. By staying calm and committed to their investment strategy, billionaires can ride out the storm and emerge even stronger. Their patience and long-term view are key factors in their ability to protect and grow their wealth over time. Number 8. Financial safety net. Finally, billionaires understand the importance of having a financial safety net. This safety net typically includes having enough liquid savings to cover living expenses for an extended period and comprehensive insurance to protect against unexpected events, like health crises or natural disasters. These measures ensure that they don't have to sell investments at a loss during a market downturn. A financial safety net also provides peace of mind, allowing billionaires to take calculated risks and seize opportunities without the constant fear of losing everything. It's this careful planning that enables them to maintain their lifestyle and continue to grow their wealth, even in challenging times. By prioritizing a strong safety net, billionaires safeguard their financial future, ensuring stability and resilience no matter what the economy throws at them. In conclusion, the strategies that billionaires use to protect their wealth during market crashes aren't just about having a lot of money. They're about being smart, strategic, and disciplined with how that money is managed. From diversification and liquidity to real assets and strategic debt, These tactics are designed to not only preserve wealth, but also to take advantage of opportunities that arise during economic downturns. If you found these insights valuable, make sure to like this video and subscribe to our channel for more content on smart financial planning and wealth protection. Thanks for watching, and we will see you in our next video.